Hello students, welcome back to Accounting 1304. This is Introduction to Accounting 2. This is Dr. Mercado speaking. Welcome back. I hope all of you are having a fabulous week. Now during this week we're going to be covering Chapter 19, which deals with accounting for partnerships. Okay, so what is a partnership? This is when two or more individuals engage in an enterprise as co-owners. Okay, this is a very common type of practice, and a lot of service business or service organizations utilize this type of uh, business entity to be able to conduct business. Okay, now please make sure that before you begin before you begin working on your assignments, you read the entire chapter. The chapter covers everything from describing the various types of partnerships, their characteristics, the partnership agreement, the advantages and disadvantages of the partnership. It helps explain how to prepare entries for the initial investment in a partnership. It explains how partners are compensated and account for the allocation of net income. Depending on the distribution established in the partnership agreement, that is how the net income is going to be distributed. The chapter also covers how to prepare financial statements reporting the allocation of a net income and partnership equity. It describes the actions that result in the dissolution of a partnership and account for the dissolution. And it describes how a partnership is liquidated and prepare associated entries and a statement of partnership liquidation. The chapter is covered with content, with examples, with information. Do not skip that step, please. Please make sure that you read the chapter before you begin tackling your weekly assignments, okay? So, there's a lot of information included. I am not going to go over that because you all can read. So, I'm going to let you all read the information first. It should take you maybe an hour to read the chapter and analyze the information, okay? After you've done that, then you can begin working on your assignments. I recommend that you complete your quiz first. It's more of terminology based, and then you begin working on your homework problems. Okay, so I'm going to start working on the first problem. I've selected two of the most complex problems that you have on your homework. That way I can provide guidance, and I believe these problems don't have videos in Cengage, so that way I can provide supplemental instruction. They're more comprehensive and a little bit more challenging, and I just wanted to provide supplemental videos because Cengage did not provide videos for these problems. Okay, so once you go into Cengage to complete your homework, some of these homework problems do have those videos embedded in them. Please make sure that you do listen to those videos. They're very informative. They're short clips that help direct you as to how to complete your problem, alongside, of course, having read the chapter. Okay, so the first problem that I'm going to be tackling with you today is problem 19-7. Okay, so Problem 19.7 deals with preparing partial financial statements and closing entries. Okay, it says the partnership of Robo and Swing CPAs reported revenues of $215,000 and expenses of $80,000 on their year-end worksheet. Their capital balances as of January 1st were $55,000 for iRobo and $45,000 for Swing. No additional investments were made during the year. As stated in their partnership agreement, after withdrawing salary allowances for $65,000 for Robo and $35,000 for Swing, the partners each withdrew their full 10% interest allowance on their January 1st capital balances. No additional withdrawals were made. Any remaining net income is to be divided on a 45-55 basis. Okay? So that means Robo gets 45%, Swing gets 55% of any remaining net income. Okay, so what do we have to do here? We have three requirements. The first requirement is to prepare the lower portion of the income statement of the partnership for year ended December 31st, showing the division of the partnership net income for the year. Okay, so I've got this first part set up here. I've got Robo and Swing CPAs. This is a partial income statement because we are only focusing on the lower portion of the income statement, which is the division of the partnership income. Okay, so I've got the allocation of net income. I've got my two partners. If you had more partners, you would include them here. Okay, and then we have three types of distribution happening. Okay, the first is the salary allowance. Okay, these partners are paying themselves a certain dollar amount. That's their salary. Then we have interest allowance. This is the interest vested in the partnership. Okay, so here they say that they're going to withdraw 10% interest allowance. Okay. And then we've got the remaining income. Whatever was not part of the withdrawal or the interest allowance, then we're going to split it according to the 45-55 basis rule in this particular example. Okay, and then we can come up with the allocation of income for the two partners in the partnership. Okay, so we're going to start off with, well, how much are we going to be distributing? Okay, what is my net income? Okay, let me highlight this yellow. Okay, and let me merge this. Okay, so how am I going to get my net income? Well, it says here, well, first of all, let's go back and say, well, what is net income? Net income is your revenues minus your expenses. Okay, revenues minus your expenses is your net income. Okay, now do they provide that information to us? Yes, they do. It says that our revenues are $215,000. Okay, it also says that my expenses are $80,000. Okay, so $215,000, let me get my calculator, is my revenues minus my $80,000 expenses. That means I have net income of $135,000. Okay, this is the amount that I'm going to distribute or allocate amongst my two partners. Okay, $135,000. Okay, so I've got the two partners information included here in the table. We're going to work with Robo and we're going to work with Swing. The first thing we're going to do is the salary allowances. These partners are paying themselves, okay, a certain dollar amount. Okay, I guess based on their participation, their type of work that they're doing. For example, here we see that Robo is going to get paid $65,000. Okay, so Robo gets $65,000 in salaries, and Swing gets $35,000 in salary. Okay. So that gives me how much? That gives me $100,000. So from the net income, which was $135,000, I'm going to pay salaries of $100,000. Okay. Next, we have the interest allowance. Okay. It says, as stated under partnership agreement, after withdrawing salary allowances, the partners each withdrew their full 10% interest allowances on their January 1st capital balance. So they're going to get 10% of what they have in their capital account as of January 1st. Okay, so let's calculate the interest allowance for Robo. Okay, Robo had, let me get my calculator out. Okay, Robo had $55,000 in capital. $55,000 in capital. And their interest allowance is 10%. So I'm going to multiply it by 10%. That gives an interest allowance of $5,500 for Robo. Okay. And I put too many zeros. 5,500. There we go. Now for Swing, let's do the same thing for Swing. Swing had capital of $45,000 and it's 10% interest allowance. That's going to give him $4,500 for Swing. Okay, so let's see what that gives us. So that means that we paid $10,000 in interest allowance. Okay, so it says no additional withdrawals were made. Any remaining net income is to be divided on a 45-55 basis. So far, let's look at this. So far, I split $100,000 for salary, or I paid $100,000 for salaries, then $10,000 for the interest allowance. That gives me $110,000. I had net income of $135,000. I still need to give them or allocate $25,000 of income. Okay, those $25,000 I'm pending to allocate will be on a 45-55 basis. Okay, so I know that I need to split $25,000 between them two. Okay, so I know that I'm still pending to split $25,000, and the first the first partner, which is Robo, gets 45%. Okay, that gives me $11,250. So Robo is gonna get remaining income $11,250. Okay. Now Swing is going to get, remember we had $25,000 remaining that needed to be distributed, and swing is getting 55% of that. That's going to give me $13,750. Okay, and then we're going to add those together. Oh shoot. Okay, I'm going to add those two together. Here we go. So now I can add each of my columns. Okay, I want to know how much Robo took home. Robo took home $81,750. Swing took home $53,250, and the total distributed was $135,000, which is the amount of net income that needed to be distributed. Okay, so now we have the allocation for Robo, for swing. So from the $135,000 net income we had, $81,750 went to Robo, $53,250 went to swing. And we had three different types of allocation: the salary allowance, the interest allowance, and then of course the remaining income. Okay, so that is the distribution for the income for Robo and swing CPAs. Okay, so that is requirement number 1. Okay, so what we're basically doing is we're distributing those 135 into the two partners. That's what we're doing. Okay, and remember that total needs to equal to your net income amount. Okay, requirement 2. Prepare a statement of partners' equity for the year ended December 31st and the partners' equity section of the balance sheet on that date. Okay, so let's start off with the statement of partners' equity. Okay, so we have the title of the business, Robo and Swing CPAs. This is a statement of partners' equity for the year ended December the 31st. Okay, so we're always going to start off with our beginning capital. Okay, the beginning capital was provided to us. It says here that we have $55,000 for Robo and $45,000 for swing. Okay, so we're going to copy that over. Let me go ahead and make this. There we go. So we've got $55,000 for Robo and we've got $45,000 for swing. Okay, we're going to add those two together. That gives me $100,000. Okay. Next, we're going to bring in the net income for the year. Okay. Now that is coming from this line item right here. Okay. Those numbers right there are going to flow down here. Okay. So we're just going to copy and paste those numbers down here. So net income for the year, Robo had $81,750. Swing had $53,250. And then your total is going to be $135,000. Okay. I'm going to add those two amounts together. Let me put a little underline here. Okay. I'm going to add those two amounts together. That gives me $136,750 for Robo, $98,250 for swing, and the total is $235,000. Okay, so that is, you're adding your income. Now I'm going to subtract my withdrawals. Okay, now we're going to subtract your withdrawals. Now your withdrawals are your salary allowance and your interest allowance. Those are the withdrawals that were taken from whatever was distributed to you. Okay, so the withdrawals are your salary and interest allowances. Those two are your withdrawals. Let me highlight these green. So let's look at the withdrawals for Robo. Okay, Robo had $65,000 for salary and $5,500 for interest. That gives me $70,500. Okay, let me highlight these green. That way you know that I got those from top. You add those two numbers on top, these two, and it gives you the $70,500. Now let's look at swing. Swing had $35,000 plus $4,500. That gives me $39,500. Okay, $39,500. Okay, and then we're going to add those two together. That gives me $110,000. Okay, so now I'm going to get my total. The one that we have here, the $136,750, the $98,250, and the $235. I'm going to subtract my withdrawals to get my ending capital. So it's your total minus your withdrawals, and that will give you your ending capital for each of your partners. and that's going to be 66,250 for Robo, 58,750 for Swing, a total of 125. Okay. So in order for you to prepare your statement of partners equity, you needed to complete your income statement first, okay? Because you are picking up numbers from your income statement to complete your statement of partners equity, okay? So that is the first requirement. And then they're asking us to prepare the partners equity section of the balance sheet on the date, okay? So we've got the partners equity down here. I've got Robo and Swing. This is a balance sheet partial for December 31st. And they're only wanting us to work on the partners equity section. So this is the partners equity section, okay? So I've got my two partners, Robo and Swing, okay? And now I'm going to bring in my ending capital, okay? Which is that number right there. That number is going to flow over here, okay? So you see information is flowing from one financial statement to the next, from one financial statement to the next. So I'm going to bring in my 66,250 for Robo, my 58,750 for Swing. Let me just put commas here. There we go. And then we can get our total. Our total partners equity, you add those two numbers together for both of your partners, and that gives you the 125,000. So this basically gives you, okay, the ending capital balance for each of your partners, okay? So we had already calculated that in my statement of partners equity. I just bring that down and put it into my balance sheet section of partners equity, okay? So that is requirement number 2. Now, requirement number 3. Prepare closing entries for the partnership as of December 31st. For simplicity, use the account titles revenues for all revenue and expenses for all expenses, okay? So on your book, there's figure 19.4 that deals with the closing entries. So we have 4 entries that need to be done when we are closing our or doing our closing entries. Entry number 1 is we're going to close all revenues to income summary, okay? That is step number 1. And this is happening as of December the 31st. So this is happening as of December the 31st. So step number 1, close revenues to income summary. Okay. So how much do we have in revenues? Okay. It says here we reported revenues of $215,000 right there. No fill. So we reported revenues of $215,000. Now when we record revenues, we record them under a credit. Because we are closing them out, we have to do the opposite, which means that my revenues are going to be debited. That way I can zero them out for $215,000. And we're going to close that to income summary. Income summary is going to get credited $215,000. That is step number 1. You're going to close your revenues to income summary. Step 2, you're going to close all expenses to income summary. The problem stated that we had expenses of $80,000, okay? So we have to close expenses. Now your expense accounts normally have a balance of a debit, okay? So if we're going to close them, then we need to credit them, okay? So we would have to credit my expenses and debit income summary, okay? So income summary would be debited and the amount of my expenses was $80,000. And of course your expenses are going to get credited $80,000. That way we can zero them out. So you always have to think, okay, what is the normal balance of an expense? The normal balance of an expense is a debit. If I want to close it, then I need to do the opposite, which is a credit, okay? The normal balance of a revenue account is a credit. If I want to close it, then I need to debit it, okay? So you need to know your normal balances of your accounts, okay? So that is step number 2. Step number 3, you're going to close income summary by allocating each partner's share of net income or loss to the individual capital's account. Okay, so this is going to be the allocation of income. We're going to go ahead and we're going to close that to income summary. So those amounts right here are going to be closed, the allocation of income, okay? Because we did have income of $135, now we have to close those out, okay? So here we're going to go ahead, and this is happening on the 31st as well. Okay, so we've got income summary. Okay, and the amount of my debit will be my total, which is $135,000. Okay, and then I'm going to close my capital account. Oh, I put an extra thing right there. Here we go. And the amount for Robo is 66,000. I'm sorry. The amount for Robo is 81,750 right here. 81,750. And then the amount for Swing is 53,250. Okay, we're getting this from the income statement right here. Okay, 53,250. Okay, so that is step number 3. Okay, now step number 4 is you're going to close each partner's drawing account to the individual capital accounts. So we're closing to capital, no longer to income summary. We are closing the partner's drawing account to the individual capital accounts. Okay, so here we have the withdrawals. Okay, let me highlight this. This is the amount, the withdrawals. Those are going to be the ones that are going to be entered into your closing entry. The withdrawals for salary and interest. Okay, that item right there. Let me maybe put a little arrow. The withdrawals are going to go down here. Okay, there we go. So the withdrawals, okay, we're going to go ahead and we're going to close those to the capital. Okay, now a drawing account usually has a debit balance. If I want to close it, then I will need to credit my drawing account. Okay, so your drawing account for iRobo will be credited for the amount of 70,500. Okay, and we are closing to the capital account. So I'm going to have iRobo capital 70,500. Okay, so we close Robo's withdrawals first. Then I'm going to close Swing's withdrawals. Okay, so remember, the normal balance of a withdrawal is a debit. If I want to close it, I would have to credit it. Okay, so I would have to credit B Swing. I'm sorry, and here it should not be capital, it should be drawing. I typed the wrong information. We are closing the drawing account. Robo drawing, there we go. So here we have B Swing drawing, and the amount of my drawing for Swing is 39,500. Okay, and I am closing it to my capital account for Swing. So I'm going to have B Swing capital of 39,500. Okay, so let's recap. First, you close your revenues to income summary. Okay, revenues normally have a balance of a credit. If I want to close them out, you have to do the opposite, which is the debit, and that 215 was provided to you in the problem. Okay, so revenues get debited, income summary gets credited. Step 2, close expenses to income summary. Expenses normally have a balance of a debit. If you want to close them out, you will need to credit. So expenses are going to be credited, income summary will be debited. Okay. Entry 3, close income summary by allocating each partner's share of net income or loss to the individual capital accounts. So here we have this entry, and that is being done, let me put a little arrow, by the allocation of net income right there. Okay, so whatever the allocation of net income is from your income statement, these last numbers, that is what we're going to be doing our entry for. So income summary gets debited for the total, capital gets credited for the 81,750. That's their distribution for Robo, and then we have Swing capital for the 53,250. Okay. And then last but not least, close each partner's drawing account to the individual capital accounts. So we have our withdrawals right here, 70,000, the ones in green. Okay, we have to close them individually. So we're going to close out the drawing to capital. Now the drawing has a normal balance of a debit. If I want to zero it out, then I would have to credit it. Okay, and these are the amounts that we're using, the ones that we calculated in our statement of partners equity. Okay, so 70,500 gets closed, the drawing into the capital, and then for swing we've got 39,500 that will also be closed from the drawing to the capital account. So those are my 3 requirements for this problem. Okay, I love this problem because it takes you through the flow of, distributing the net income to each of the partners, figuring out the ending capital for each of the partners, and then of course doing the closing entries based on the information provided. Okay, so that is problem 19-7. Please, if you have any questions while you're completing your assignment, don't hesitate to contact me. I am here to assist you. Just make sure that you do include your problem number, your attempted solution, step by step. That way I can review it and provide guidance. Okay? Please make sure that you manage your time so you can ensure that you complete your assignments by the allotted due date. Okay, as I don't grant extensions. Remember, I'm available Monday through Friday. If you message me on the weekend, I will not guarantee that I will get back with you. Okay, not until the next Monday. Okay, or the next business day. Okay, so if you have any questions, please make sure that you send those questions my way Monday through Friday. That way I can be able to respond to you timely. Okay, so that is basically it for this lecture. Until next time, I hope you all have a fabulous rest of your week. Thank you.